having a simple trading model, what you should be looking out for as a day trader, as a swing trader, how you approach the market, you understand, how you should keep your mentality going into the market. That's what I'll be focusing on in this class. Your mentality, what you should be thinking about, how I want you to think. You want to be profitable. This is the way you look at it. This is the lens. I'm giving you guys the lens at which you should look at the market. You understand? And we're going to have another class tomorrow, hopefully, if everything goes all right with real life. Because I should have had this class with you guys long time ago, but you know, my real life activities has been very, 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 very hectic for me. So, but like I promise, I always keep to my promise, and I will always show up for you guys until I am very sure that you guys can do these things on your own. And hopefully, if you actually put in the work, you're gonna do this on your own. Trust me. So, in order to, be profitable in trading, it's not about what you know. It's not about the number of things you know. It's about how you use them, what you utilize, and how you approach the market. It's all about trading with proper logic. You understand? And when you're trading with proper logic, you need to have some kind of narrative. When I say narrative, it's more like, okay, we swept this high. I want to see markets attack that low. And to see that happen, I want to attack with an order block. I want to see them create an order block, and I want to enter off the order block. And I don't want to see them get above this high, unless I am wrong. But I want to see them get to the low of this range that I'm trading in. That's your logic. That's your narrative behind the trade. So it's more like, you keep it very, very simple. You understand? And I've taught you guys a simple way to approach this by noting your ranges, right? So now, when noting your ranges, trust me, all you have to do is trade your range one after the other. That's all you have to do. Already I taught you guys about SMT. So a range high being taken on a correlating asset and not taken in the asset you're watching. That's the same as a range high swept. And vice versa for the low. Excuse me, guys. Excuse me. So a lot of you have, at least be disturbing me to, teach you something. And I want to let you know that I'm not gatekeeping anything. You understand? I'm not hiding anything from you. It's just I understand, how far I've come in this market. I understand that it's not about what you know. You understand? Okay. So all I want you to do is take whatever you can get from what I'm teaching today and make it your model. Stop strategy hopping. Stop it. Stop looking for the next shiny thing whenever you lose a trade or whenever you have a losing day. That's killing your trading. Instead, journal why did this happen? And you might get better at what you're doing, you understand? So when you talk about CRT, let's have a narrative here. When you're talking about CRT, you want to be looking at price from the lens of accumulation, manipulation, and distribution. So these are three candles, right? I'm just using this as an illustration. So these are three candles. You understand? Wait, I want to remove something. These are three candles. You understand? And this is just a basic CRT, right? This candle right here, this first candle, serves as the range you're trading in. You want this candle to be a big candle. That's rule number one. You want to see a very big candle with respect to the time frame you're trading. You understand? But then I'm gonna advise you to trade this on your 4-hour chart. Use candles from 4-hour charts and above for high efficiency. So when you see this big candle close to let me say a key level, right? And you see it comes that close, right? And we make some kind of consolidation at the lower time frame, and then we dig into it on the next candle, right? This is the whole 159 crap you guys are seeing. It's very simple. You're looking at this candle as accumulation. We are manipulating into a key level, which will cause an expansion. And we are distributing to those accumulation highs for the closing of the day. It's very, very simple. Don't make it hard for yourself. So it's more like, a range high, a range low, a range high gets taken, or in this case, a range low gets taken, we attack a range high. It's that simple. Don't complicate it. Don't complicate it. Now, how do you find, high probability CRT? The only way you find high probability CRT is having a key level, an important key level that we are digging into. 2 is time. But then, one of the most important things is key level. And what could this key level be? Maybe an old high, old low, something like that. Order block, fair value gap. Those are the key levels, right? So, how do you approach this? Okay, let me clear the charts so we look at it real time. So let me say we're trading. So now, what are the ranges? I've told you guys the Monday range, the Asian range. Then you can also use, the 4-hour candles or the, daily candles, weekly candles, right? So let's look at this one right here. Mhm. Okay, so let's look at this right here. Mm. You could see this candle right here, right? You could see we swept the high and we went for the low. So this candle right here, it's more like your accumulation. This right here is your manipulation, and this third candle is your distribution, right? Let me look for more examples. I'm giving you the narrative. I'm not yet showing you how to enter. Just chill. Accumulation, swept the high, we attack the low, right? Now, we all know that you want to take your Fibonacci to mark this candle high to its low, and the 50% is where you take your first profit, and the range low is where you take your final profit. It's a mechanical way trading. That's the rules. If you're changing it, then you're changing your edge. That's the rule. So you have to be confident enough to hold it to the 50%, and you take your partials right there. There's no but. Don't be greedy about it. You take your partials right there, and then you leave the rest to run to the low. You understand? So now this candle right here, what was the key level? I know that might be your next question. What was the key level that led to this? You notice that we actually swept a high, right? If you look at it, you notice we actually swept a high. And at our high, we have some kind of rejection block right here. That's the key level. That is your key level right there. You can also use this high as your key level. The moment you sweep above that high, that's the key level. You understand? So let's backtest on this one right here. So right here we have this candle right here. Now, how do you approach this? A lot of you, let me say this one time. A lot of you are gonna, the moment this candle closes, you should be on your chart. You're waiting for a setup. You're waiting for this high to get taken, or you're waiting for it to take this low and enter into this fair value gap. You wait. Why? This candle is big. It's close to a high. It's either they take out this high liquidity and return for an imbalance, or they trace into an imbalance and attack liquidity, because that's the only thing the market seeks. Listen again. If the market seeks only liquidity and imbalance, and we have a big candle this way, we expect the market to retrace either into the imbalance and take the liquidity, or take the liquidity and retrace back to the imbalance. With respect to the lower time frame reaction we get of the key level. So the moment this candle closes, this is 1 a.m., we go down to your hourly. You want to see what's happening right there. Automatically, you've gotten your range. So now that's your range high and this is your range low, right? Personally, what I do is this. I try my best not to get distracted by the lower time frame break of market structure. So I stay on a higher time frame like the 1 hour, right? You can just set your alarm and allow price to do its thing. The moment you take that high, I mean this higher time frame high, not this one. If remember what I told you guys about fake break of market structure, as long as the objective has not been met, then we haven't hit anything. Market is just reacting off nothing, and if it's reacting off nothing, you have no trade. Unless this was an SMT, then I can start looking for my setup. You understand? So I'm waiting for that high to get taken. and we actually hit it right there. The moment we hit it with this big candle, I'm marking the high of this big candle right here. I'm teaching you guys how to look for these setups on yourself. So now we're waiting for a sweep above this high with a break below to give us, some kind of order block entry, right? Now we're marking the 50% of this range. Notice this little accumulation right here at the low of that candle. It's not random, man. That's the original consolidation of the market maker sell and buy model. So now I'm waiting for price to go above his high and probably give me something to hope on. Okay, so we break this boldly. I'm gonna take this trade right here at this order block right here, and my stop will be at the high. Now I am taking this trade here because I'm not seeing a correlating asset, so I don't know if it has already taken that high in a correlating asset. So I'll take this trade right here off the order block. My target is the 50%, and my last target is the low of that 4-hour candle. So now, what's your narrative? Your narrative is this. We took out a high of a candle I am using for my range, and we took out a higher time frame liquidity, and we created a lower time frame entry model, and I'm going to attack the 50% of that candle range and the low of that candle range. So and we got tagged right here. Let's see. And that's what goes with, trusting your stop loss, right? This is the real Mentorship. You should understand that if you are correct, the market will not take out the low that swept the high. And the market will not take out the high that swept, the market will not take out the high that swept the old high. And the market will not take out the low that swept the old low. Meaning this guy swept this liquidity and created this order block. It's meant to be strong enough to hold price. So this is our partials right here. And we go forward. I can just click a play. And then you notice that we have hit the 50%. So that's your partials right there, right? You're holding the rest to see if you get the low. Now, it all goes down to, do you have the patience? If your psychology doesn't allow you to, hold on to trades like this, I am not advising to, hold for all this. You can literally still make enough money with this, right? You can still make enough money with just this. This is up to a 3-hour trade. It's all about what you're risking. You understand? If I risk $1,000 on this trade, I'm gonna gain $3,000. And if someone risks $500 and headed to this low, the person is still gonna make the same $3,000. You understand? So it's all about RR and risk management. So if you don't have the psychology to hold for full targets, keep it simple. Attack the 50% and be done for the day. And let's see how it goes. And then you notice we made some kind of strong move here. I'm gonna pause it right here. I'm gonna show you guys something. So now you notice that we swept this high right here inside this fair value gap. And then before we started going lower, right? This reaction right here of the 50%, The moment we break here and you notice this weeks, then that's a clear sign that we are going for the low. What they did here was more like taking it away from the discount level, taking it into the premium in order to sell off again. Perhaps the reason why you shouldn't be selling inside discount, not buying inside premium. So when you take a range, high and low, you mark the 50%, you are buying below it, the 50%, and you're selling above the 50%. I hope this is actually making sense to you all. Let's look for another example. Let's check for another setup. All right. Give me something. Give me something. So my main focus when I'm looking for CRTs are big candles. That's my main focus. And I'm looking for reactions below those big candles or above the highs of those big candles. So for you guys asking, those are my main descent. Or big candles close to a key level. Let me keep it that way. Well, it's easier to find them on the daily chart there, but then as an intraday trader, I think the 4-hour chart should be better for you though. That's what I believe. That's my suggestion. So right here we have this big candle right here. Crystal clean. Trust me, this things actually occur daily. It's just that during back testing, I'm looking for the cleanest one. It doesn't have to be crystal clean. Understand that? But this one right here, the one I'm using right here is 6 hours. So imagine how many hours, how many days it took for them to come back here. But it still goes back to the same logic. We take the high and we didn't close above it. When we close above it, it's a sign of real breakout, meaning they might continue in that direction. When we close below it, the same. But when we take it out and close back into the range, that's into the body, that's a sign of reversal. That's the kind of sign you want to see when you're trying to attack the 50% and the other side of the range. Understand? So, like I said, it's very, very simple. Keep it very simple. Go to your chart. Just do exactly what I'm doing right now. Mark out these candle highs and lows and see how they were attacked. After taking the high, how they attack the low. That's what I want you guys to practice on. You understand? Just quit listening to any other thing. Work on this alone. Your problem is you're trying to trade every single day. You want to catch something every single day just because you see me doing that. I don't really do that, though. A lot of you assume I do that. I don't do that. Most of the times when I force something, I get my ass burnt. And trust me, you don't want to do that. So this one you trickle out into the order block right here, and then we went for the low. Just go into your chart, mark it this way. See your ifs, buts, why, would, could, should. Look at it. Took the high back here. This was a catalyst, this volume imbalance. That was the key level we dig into. So right here, I've given you guys the two of what it should be like when you're looking for the CRT of a thing. So 1, key level. 2, a big candle. 3, time. time. So I think that's all for now. Assignments. I want you guys to go into your charts, mark out a key level and mark out a CRT with it. I don't care if it's hindsight. All of them should be hindsight, by the way. I just want you to mark it out. Mark out the possible entry. Use this entry I gave you guys, the order block entry, which is the break of market structure and sorry, not a break of market structure, a close. That's an order block entry. That's what I want you to mark. So when you mark a CRT, show me where you will enter and show me your first target and your last target. That's your assignment. We're going to continue tomorrow. So I want you guys to digest this. Watch it once, watch it twice. I don't like my videos being long. That's why I want to cut it here. Like I said, we're going to have another class tomorrow, so don't rush it. One step at a time. But make sure you do this assignment. That's the only way I know you're improving. You understand? So mark these things out with a proper narrative and logic. Mark your entry and show me. I hope you found this one insightful. Till we meet again, guys. Be safe, good luck, and good practice.